people would do well to become educated about getting off of that treadmill of the job and just automatically putting money into a 401k because statistically it doesn't work.
My name is Mike Mauceli, and this is the Energy Show with REI Energy, where we're energizing your investments and maximizing your tax deductions. Today, we're going to be talking about investing in oil and gas, and you're going to discover how the oil and gas industry has rewarded investors and outperformed many of the other popular investment sectors. In today's show, you will also discover how to educate yourself on the different investment opportunities in oil and gas. My guest today is Andy Tanner. Andy is a good friend. He's also the founder and head instructor of the Cash Flow Academy. He's an author of 401 Chaos and Stock Market Cash Flow. Great to have you on the show today, Andy.
Oh, it's wonderful to see you again. It was good to see you in Phoenix not too long ago.
Yeah,
Robert had a birthday party, and it was a lot of fun.
it really was. And like I said, it was a great time. But anyway, I wanted to talk a little bit today about oil and gas because I know you do many types of investments, and you teach classes on investment opportunities, and I know your book 401 Chaos, and wanted to kind of talk a little bit about that first, and if you can tell our listeners a little bit about it.
Well, absolutely. And I love all types. I think it's funny, Mike, that people, when they get in their niche, they'll say, well, this asset class is great and this one's not. If you get in real estate, all you got to do is clean toilets. And if you get in energy, you're going to have dry holes. And if you get in stocks, it's too volatile. But I really love learning about all types of investing. And you mentioned 401 Chaos. That it's kind of fun. We're coming out with a second edition of that this fall. And the statistics for most people, it's pretty rough. Every year, Vanguard comes out with a report called How America Saves. It's just, there's about $11 trillion in 401ks in the United States, and Vanguard's got about 2 trillion of that. This is a pretty good sampling. And, the average or the median is probably a better measure of a person, 55 to 64, right? Staring retirement years in the face. They'll have $70,000, $80,000 at the most. That's just not enough. And so I think things like oil and gas, all types of different real estate opportunities, different investment opportunities, people would do well to become educated about getting off of that treadmill of the job and just automatically putting money into a 401k because statistically it doesn't work. So I think what you do is so important. I think the opportunities you provide are huge for people, and they should investigate because the numbers say for a lot of folks, they're not going to make it.
Yeah. And yeah, I know it's very important, especially in energy today, because obviously energy is one of the main drivers behind inflation. Energy prices have been pretty
Yeah.
high, and they're only expected to continue to go up. And we came out with a new product here this year, which basically is a mineral fund, which works very well for 401ks, IRAs, and 1031 tax-free exchanges, where the investors are basically buying part of the landowner's position. So, they don't have to put money out to drill the wells. And as I said, from the 401k and the IRA perspective, that works very well because they're basically just, clipping coupons as the wells get drilled and they come online and start producing. So there's a lot of different products out there. I wanted to kind of talk a little bit about that, but also talk a little bit about your thoughts on investing in the stock market. I mean, if you're an investor and you're looking at different types of investments, I mean, I know energy stocks have done very well this year, haven't they?
Yeah, they really have. I mean, I think that when it comes to energy, oil and gas in particular, people need to decide if they want to be a retail investor or an investor on the inside. Now, admittedly, as a stock guy, I invest at the retail level, which means that well, I'll give you an example. When COVID hit, probably one of the best plays I made, I don't think it was that hard to see. I can't pat myself on the back, is I saw support with Exxon at about 55. and I was going to buy it at 55 anyway. It was getting pretty low, and I said, "Oh, let's buy it 55." Then COVID hit, and so I protected myself with some put options, and those blew up when it fell even further. When trains, planes, and automobiles, they weren't running as much, and oil got way cheap. So my cost basis in that was about probably 38, 37, something like that, and it's at about
Wow.
120 today. But
That
it
is a
isn't a
good
cap.
move.
Well, you know what though, Mike? It isn't. I mean, I'm never going to sell that stuff because you don't want to sell your assets. I mean, you would want to have as many assets as you could. It's really the cash flow that I really like about that. I mean, Buffett has big interest in Occidental. I think if he could buy that company, he would. And you can see the support of where he buys it when it drops down. He also has some Chevron. I like the higher dividend of Exxon because it's cash flow. And that's where I think, getting interested in, and learning. One of the best books you ever recommended to me was Money in the Ground. And you get a great education. You learn about exploratory, and you learn about expansion, and you learn about wells that are established. And to me, it's really a cash flow play. So if a person wants to up their game, the things that you do offer uh, greater tax benefits, rebates, uh, a lot better potentials for cash flow than the retail investor would ever have. But the bottom line, when I think about energy, people talk about food, clothing, shelter as necessities. I would add energy and medicine to that list because if there's food on my table, it probably was on a railroad or a truck at some point. And you made a great point at the top of the show by, you know, energy makes the world go round. And if you're going to have higher energy costs, that's going to contribute to inflation. And so you can be on one side of that. You can be on the consumer side of that, or you can be on the investor side of that. And if you're on the investor side, inflation can actually be good news for us. So I really love energy. And what's interesting, Mike, I'll run a search for different parameters of stocks based on value. And for the last probably 6 or 7 years, if you run my criteria for what I look for in a company, I would say about 20% of the stocks that come up on that list are energy stocks. So I'm huge a fan of that asset class. I think there's stability. There's so much to like about it.
Yeah, and when you, of course, as you were saying, there's a lot of different ways to invest in oil and gas, and I also own some energy stocks as well. But I mean, when you talk with your clients, I mean, do you use options? Because it sounds like you do, to cover the downside when you're buying energy or any type of stock, really.
Yeah, I mean, the nice thing about paper assets, particularly the options market, is your ability to hedge.
Mhm.
And even if you were a real estate investor that hadn't, you weren't even in REITs, you were just in single family or what have you. If you see something is threatening that industry or a time where you'd like to hedge, the options market can provide you with that. I mentioned earlier I did it during COVID. I bought some put options. And generally, I don't buy them as much as I sell them. They also can be a great source of cash flow. The insurance business is a nice business because you don't have anything but your promise. And you're basically selling promises for a premium, whether it's auto insurance or home insurance or life insurance. There's no product there other than a promise to give people peace of mind. So I buy a lot of options. I sell a lot of options. And I think it's a great way to manage risk, but also to increase the cash flow if you're going to be a retail investor in stocks. But I'm a big fan of also getting. I like just because I'm primarily a teacher of stocks. I encourage people to learn about some of the alternative investments because I look at the real estate that I own. I don't own a lot, but compared to someone like maybe Kenny or Robert. But when I look at the real estate, I much would rather have the single family homes and even the syndications I'm in than a REIT. And a REIT is
Yeah.
like a very turnkey, great. They pay a decent dividend, but I would probably rather have an oil well than even an Exxon Mobil because the potential is so much higher. And there's no tax advantages in owning Chevron to speak of. I guess you could put it in a Roth if you wanted, or an IRA, but the tax advantages in oil and gas, that's what the government wants you to do. They're going to compensate you for those risks and incentivize you for them.
Yeah, and the industry has changed a lot since I got into it almost 30 years ago. I mean, of course, back then, when you drilled wells, you either, drilled a good well or you drilled a dry hole. Today, of course, you have the horizontal drilling and you're drilling
Yeah,
into an organic shell that has oil and gas in it. So, you're going to make a well every time you drill. Now the risk, because there's risk in every investments, but the risk is, how much oil you're going to make. And of course, how much I mean, what's the price of oil? Because the lifting cost, what it costs us to produce a barrel of oil today is about $35 a barrel in a lot of these shale plays. So the lifting cost is high. The cost to drill the wells are, almost $8 to $9 million a well. So you have to have a well that's going to make at least a couple of 100,000 barrels of oil, just to get your money back. And
yeah,
then, of course, once you get your money back, then of course you have a chance to make money. But like you said, there are some very good tax advantages as far as investing. I mean, investors can write off almost 80% of the cost of the well in the year that the wells are drilled, but you still got to work with a group that has a great team. And I mean, I know you teach a lot about due diligence, and of course, as far as from my standpoint of it, we have our own geologists, our own engineers, our own land people. So we're constantly evaluating the areas that we participate in. So there's a lot of work to go into it, no matter what type of investment, whether you're doing stocks, I mean, or, direct participation programs. And so you really got to get with a good group, or someone like yourself, obviously in the stock market that really understands the market and how to use hedges and stuff in order to cover the downside.
yeah. I think the idea of finding well, I think it begins with education first, because that's how I'm going to identify a team. I get stuff coming across my desk a lot, and I've learned to be very cautious because there's a great piece of wisdom in that we probably don't invest in things that we don't understand. One of the things that you and I came together many, many years ago in the education space, where people were coming to learn about investments. So I think that's where it starts. And then the second thing is your team. Warren Buffett talks about a moat. And that's another thing that really makes energy attractive. A moat. He was teaching in a high school classroom as a guest speaker not too long ago. And one of the students raised his hand and asked Buffett. They said, "Well, what do you look for in investment?" And that's the first thing he said. He goes, "We want a good moat, which means it's protected and it's solid and be hard to take down the castle." And I think that sector, if you look at the energy sector, I don't know when they started to worry about a lot of the greenhouse gases, and they started worrying a lot about that in the early 2000s. I think we were energy dependent. I think it was 80%, 87%, I think it was, of the world's energy came from fossil fuel. Well, in that time, it's dropped from 87 to 84, I think. I mean, it's just not a thing you can just, oh, it's going to go away. It's got a tremendous moat. And if we want food on our table and we want medicine in our cabinets and clothes on our back, there's got to be a plane, train, automobile, boat. Something's got to move that stuff to us. And so I really like energy for that reason. I think it's got a strong moat. And like you said, if we get the proper team around us, those are like sentinels also that give additional protection to that castle. So right now, I mean, I couldn't be happier with my energy investments, and I don't see it. I don't see the inflation backing off much. I
Now,
think the Federal Reserve is in a tough spot where they've frozen rates, and I don't think that's going to do any favors for backing off inflation to freeze rates. They have to because of labor. They have to. The labor market's starting to show a weakness, and so we could even see higher energy prices than ever.
yeah, even though we are producing more energy in the United States than we ever have in the past, but also if you look at Europe and you look at places, their economies are starting to turn around, and right now, we use I guess, about 22 million barrels of production a day here in the United States. And we produce somewhere around 13 million barrels of production a day. So we still import quite a bit of oil. And as far as, in gas, and then of course we, with the administration, this administration, they've kind of had a war on hydrocarbons. I mean, from everything from, trying to take away your gas stoves, trying to, take away your dishwashers, trying to, just all kind of crazy, policies that they're sticking out there. And as far as that, just to put more pressure on the oil and gas industry. And the problem, I think, what a lot of people don't really realize is that, you can't turn that ship around on a dime. Even if you said tomorrow, we're going to unleash everything and we're going to start drilling. I mean, when this administration came into office, the first thing they did, they killed the Keystone Pipeline. Well, that's gone now. I mean, they've actually started pulling pipe up and selling the pipe, and so it's not going to happen in the future. So even if you said we're going to turn this around today, I mean, it's going to be quite a while before things actually could get back to normal, because companies get out there and when they plan, I mean, they're planning for 10 years out. They're not planning for tomorrow. So when you start pulling those projects off of the drawing board, I mean, it takes a while. So I think prices are going to
Yeah.
stay pretty high myself.
Yeah, from a political standpoint, I've always been very apolitical because I just
Right.
want to know what the rules are. I don't
Yeah.
really
No, I agree with
get
you.
it. I don't get in many lines and hold my sign, but I think where a lot of them have to miss the boat is you have to be pragmatic. If you look at the Middle East, that's not it's just not a stable place in the world. There's just problems all the time. Venezuela has tremendous oil resources, as does Brazil. But the problem with Venezuela is you can't get a government that. I remember Petro Brazil at $5 a share. In fact, I was with Robert Kiyosaki in Chile, and the reason it was at $5 a share is because the company was so corrupt, they were paying kickbacks to government officials and all this. So the idea of energy independence politically actually would give more stability to energy prices. It's going to get produced anyway, for sure. And as the third world countries become second or first world countries, if it's okay to still say third world without getting canceled, when those developing countries, they want westernization, and there's just going to be more and more energy there too. So
Yeah.
I guess the way I would put it to people is be a net producer in your life. I did something interesting, Mike. I don't know if I told you about this, but my boys, and
Right.
when Zach, my older one, finished the eighth grade, it happened to be the COVID year. And I said, first of all, there's no basketball to play. Do you want to burn a basketball year? No. And second of all, school's going to be a joke. I said, let's take a year off out of school. Let's just come home and let's learn financial education. I said, I'm going to show you something. One of the first lessons was on energy, oil and gas. So we went down to he hadn't had his driver's license yet, but we went down to the local gas station where we always fill up. We filled up the vehicle, filled up the SUV, and he saw how much we spent. And he filled it up and did the thing. We came home. I said, now watch this. And I pulled out my American Express card statement, and I said, this is how much we consumed in this type of energy for the year. And it was pretty big number. I says, that's all this going to basketball practice we cart you guys around to. Then I said, watch this, son. I pulled out my brokerage statement and I said, let's look at just ExxonMobil in terms of cash flow, not capital gain, because we're not going to sell. I don't care if I bought at 55 and it's at 120. I'm not selling it because I don't want to lose the cash flow. And so we added up all that cash flow, and he's like, oh my gosh. I said, so son, when it comes to energy, we produce more than we consume. And I said, when it comes to real estate, we produce more, we provide more housing than we use. And when it comes to the cell phones and the AT&T networks, we produce more than we consume. And I said, in your life, if you can become a person that produces more than you consume, that's a real key to start creating some wealth. And so if people are not, I imagine a lot of your listeners are established oil and gas investors and want to know where the next, where the rudder may go. But I think there's also a lot of people, at least people that follow me that might watch this, where they're just learning about oil and gas. And I would encourage them to do that.
Yeah,
And
no,
learn about it, get a team, and because it makes the world go round. And as an investor, it is, I think it's a required curriculum, if I could use that phrase.
no, that's great. I mean, obviously that makes a lot of sense. And, I'm sure a lot of your people that follow you that go to your classes and get educated. I mean, obviously they get a great benefit out of that. And that's pretty neat how you're teaching
Well,
your kids how to, to be a producer in life
that
as
might be
opposed to,
good. That might be a good lesson for adults as well.
yeah,
I also think that one of the you mentioned about the different types of products now that people can learn about, because it used to be, and I imagine this has changed in your business a lot. It used to be that you either had to, maybe buy a stock like Chevron as a retail investor, like I would tend to do, or you had to be an accredited investor to look at some of the more aggressive deals if you wanted to, maybe invest in an expansion well or something with a group of people, much like a syndication for real estate. And I think there's a lot of products now that are in between that, where a person doesn't necessarily have to be that accredited investor. I think there's people that might not realize that they can participate in a middle ground, so to speak, where they can get involved in some of those investments without having to be accredited. So I think that's
yeah,
another thing that I've watched in your business in the time I've known you that's been a big change.
yeah. No, that has been changing, and in fact, the SEC, I think there's some rules before Congress now that they're going to lessen some of the restrictions of being an accredited investor. If an investor it hasn't passed yet, I don't think, but I think it's before Congress where investors can actually take a test online, and if they show they're knowledgeable about investing, then they won't become an accredited investors, but basically they will be able to invest in a lot of the same products. And of course, you have different programs out there now. We've been looking into a Reg A product, which basically allows you to take non-accredited investors. We used to do public funds, but just the cost of getting those through, the SEC was very, very expensive. And so the fund had to be a very large fund in order to make sense for it. But now with this new Reg A program that they have out, I think it's a lot less money to get it approved. And of course, you can go in and take non-accrediteds also.
Well, and politically speaking, I think that's kind of humorous because on one podium, they'll say, "Well, we don't want to have as much oil and gas, and it's dirty and it's rotten." But on the other part, you're passing laws that make it easier to invest because they know behind the scenes, uh, they need investment. They need to incentivize people to invest, and the drillers can't drill if the investors don't invest, and they know we need that. I'm a big fan of energy independence. Risk is about control, and the
Yeah.
more control you have, the less risk you have. The less risk or the less control, the more risk. So I'm kind of a fan of domestic efforts to incentivize investors to support that industry and help the guys that refine and the guys that explore to tap those resources.
Yeah, and like you were saying, I mean, the federal government actually, came out originally with the intangible drilling cost deductions because they wanted to promote oil and gas
100%.
exploration. And, that was done back in the 1920s, I think, and learned that from Tom Wheelwright as far as on that, what year it was done in, but of when it was actually brought out. And as of today, it's not a subsidy like wind and solar. I mean, basically it is tax law, and it's been a very integral part to get investors to help participate in finding the kind of energy we need in the world today. And in my opinion, it's not going to go away anytime soon because simply the technology isn't there yet for alternatives. And, I believe we need all forms of energy. I mean, we've got what, 7 billion people in the world today. So we need wind, we need solar, but we
Oh
need it
yeah.
when it becomes very efficient. And but right now, I mean, natural gas, of course, is our number one source of electricity here in the United States. And, I think if a lot of these politicians were serious about it, there would be more emphasis put on nuclear, but I just don't see that happening.
Yeah, I know a lot of I think it was funny. Bill Gates was very transparent. He said, when you're a hammer, everything looks like a nail, and he believes the technology for nuclear will be, absolutely key. But I also think people don't realize. They think, well, when you invest in Exxon, you're investing in oil, and they think about dirty, black sludge in the world. But these are the very companies that know that they need to invest heavily in research in making it cleaner, making it better, and also alternative. I mean, they're not dumb like Blockbuster Video is. When you saw Netflix coming, you knew you had to evolve. And I think these guys know that they need to make things cleaner and better. And they have the science and they have the education to do that. And that's always where I wind up. I'm a broken record. I'm an education advocate, and I think in terms collectively as an electorate, the more you learn about something, the better policies you're going to make. Policies brought out of emotion rather than facts and education, that's a bad mix. And so, societally, we need education, but even far more important than that, because that's glacially slow to make changes there. Far more important is your own individual education.
Yeah.
And I think
And
that makes you unique in what you do is, a lot of people say, hey, let's just go drill a well, but you really do take the time to help people understand as much as possible about that industry. So as an education advocate, I want to learn about every kind of asset class that's out there. It makes me smarter, gives me protection. There's some tough stuff coming down the road. We have some fiscal irresponsibility. We have some monetary. We could talk about that stuff another day, but I will just warn people there is some tough stuff economically happening in the world where you're going to want to have assets, you're going to want to have income, and you're going to have industries that you create wealth in that have that moat. And now is the time to start doing that as soon as possible. Learn about how to buy assets in asset classes that have that moat, and energy is one of them.
well, I really appreciate you being on the show, Andy. I know you got a hard stop today. And can you tell our listeners how to follow you?
Oh shoot, I don't know. They probably Google me and find me, but if they're interested in 401 Chaos, they can go to 401chaos.com, and I give that download for free. But we have a lot of fun resources. I'll do a live stream class every other week or so, and if people want to spend a day learning about my asset class, they can go to thecashflowacademy.com, and they can get on our list or what have you. And I'm pretty easy to find. So, but
All
it's
right.
I look forward. We should do this more often, Mike, because
Yeah.
I enjoy your company, but I always learn one or two things when we talk. And I'm interested, always continuing to expand my energy portfolio. So I appreciate the opportunity to be with you.
All right. Well, great. I'd love to have you back again.
This podcast is a presentation of Rich Dad Media Network.